Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst for the last 13 years. In this video, we're going to check in on the markets as we get ready for Powell and the FOMC tomorrow. I'm going to go over a failed trade from this morning's live stream, and we'll check in on the cannabis sector, which continues to sell off.
All right, so we had the bears come out in full control this morning and then a surprising bounce and bulls recovering. And I say surprising as far as the magnitude of the bounce getting back to the high of the day. And one of the reasons was we had all major sectors hit the low of the day together today, XLF, XLV, and QQQ. And that's the first time that's happened in many weeks. And oftentimes that means bears control the entire day. There will be times where that happens in the morning. We get bear flag weak hourly bounces midday, and then we close weak. And obviously today that did not happen. I will often, whenever I see that happen, say, I'm not taking any long trades today. And that has saved me many times in the past from fighting against significant bear momentum. But today the bounce trades would have played out on the hourly. So one thing to note on the S&P 500 and the NASDAQ, as we know Powell is tomorrow at 2 p.m. Eastern, just keep in mind that generally the volatility these days has been 2:30 p.m. when the conference starts into the end of the day. And then again, the real volume comes into play Thursday and Friday when there's more than just a little over an hour left in the trading day to move significant capital around. So we're looking for that in the short term. But when I look at the weekly timeframes, I make note to myself that if we do see weekly tightening ranges, and over the next week or two, that's what we're looking for, information as to whether or not the S&P 500 and NASDAQ can form a weekly higher low and tighten up. But if that does happen, I'm reminding myself that oftentimes that means the shorter term time frames can get choppy. So if you're in an hourly equilibrium, sometimes the 5-minute chart can get choppy. When you're in a weekly equilibrium, the daily chart can get choppy. And so that's something I'm just keeping in mind because so far I've really liked the clarity recently where bullish over the summer, thanks to our laggard setups when we were watching our growth names and IWM to play catch up, bearish when we confirmed the first daily downtrend in 3 months. That was a nice and clear signal. The bounce definitely was looking for a bounce on the weekly. And so now it's pause because the clarity is shrinking. The ranges are constricting. And so again, for me, we're going to be looking for follow through when we either break our low or we break our recent high. And so anything less than that, looking for it to potentially be choppy. So the daily time frame on SPY, we have broken bear. If the bears are going to follow through, we will need to confirm the daily downtrend. At this point in time, SPY and QQQ have lost the daily uptrend, but the lower high and lower low is needed if we're going to confirm the daily downtrend. And so even if it's a bullish reaction to the FOMC, Thursday and Friday, let's see if the bears come out and set that daily lower high. QQQ, everything that I just said applies here as well. Significant bounce off the low of the day. And can the bears confirm the daily downtrend as the result of the next bounce? Weekly tightening range means the daily chart can get choppy, and we are still a good bit above support. Bears at this point would need a drop of over 4% to break the weekly support. So we'll see what Powell says and what the reaction is, but again, just keep in mind, Thursday, how we close Wednesday, it isn't game over. We oftentimes see the opposite happen on Thursday. And so we're going to keep an eye out for that. So the cannabis sector continues to pull back. Talked in the weekend video about how it was almost like a green light for the bears this week, just in the sense that there's no headline risk. We got the headline that we're looking towards safe, September 27th. And so what do bears have to worry about this week? Very low probability of a headline catching them off guard. And so the bears have followed through significantly from the gap up open to end last week. And technically, MSOS has lost the daily uptrend by breaking 808. And we also have the potential of a daily head and shoulders, where even if we bounce from here, there's a lot of space for a daily lower high. And we can bounce 10% and form a daily lower high. We could bounce 15% and form that lower high. And then if we confirm the daily downtrend, that tells us further weekly consolidation is coming. Remember also what I said in one of the recent weekend videos, we know we're going to see weekly consolidation because this isn't going to be a long-term bottom until we confirm a weekly uptrend. And so now we're watching the weekly retracement size to gauge whether this is healthy or not. Right now, it's still a possible weekly bull flag. If we drop down to the low $7 range it's then going to shape up the possibility of a weekly tightening range. So bulls want to set the weekly high or low as soon as possible. And one of the key bits of information will be, do the bears confirm the daily downtrend as the result of the next bounce? We got to call it like it is. The bears are coming out with volume. This is a lot of profit taking and a lot of bear volume. You can see it's, trending down volume, but the spikes are on the fairly sizable red candles where the bears control most of the day. And so bears are really confident right now in the short term. One thing I'm looking at is CGC, bear break. So high, low, lower, high. Break of 104 means CGC is now in a daily downtrend. There's a gap to fill at 959 to be keeping an eye on, but here's the weekly consolidation underway. And again, watching the retracement size. Currently, the retracement is more significant than MSOS. We're already well past 50% retracement. And again, we're creating the scenario here where it's entirely possible CGC sets a weekly high or low and then a lower high and just tightens up through the fall. And I know everybody's talking about SAFE in the headlines, but so maybe, let's just say SAFE does make progress. Maybe that's the weekly high or low, and then we bounce 50% and still just form a lower high. So ACB holding on better, but watching to see if it follows. We would have to break 727 to be in the same spot that CGC is currently in. So we can say ACB bulls are holding on better than CGC. We had a double top with the high of yesterday. And TLRY continues to be the lead bear at this point with hourly and 4-hour oversold conditions. Just like bears want to see a gap up, I want to see a gap down. If I'm looking for a TLRY temporary bottom, I'd like to see a gap down open under 242 to be looking for at least an hourly bounce to take place from there. It's just been a straight drop for 3 days at this point. And so I want to see that climax kind of action with the gap down open. So overall, the bears have full short-term control of the sector. We're going to be looking for weekly higher lows eventually. And a big question for me is, does MSOS confirm the daily downtrend? CMPS talked about in the weekend video, the rising wedge that was shaping up. And if this confirmed, it was going to mark a weekly lower high and a continued tightening range. It has broken bear with follow through. And so we're just going to keep on tightening up on the weekly. This is over a year in the making. And now our lower high is set at 1012. And now it's all about 760 support for the bulls to try and remain within this tightening range. But definitely a short-term win for the bears in the psychedelic space as well. NVDA, just a tightening hourly range. As soon as we pulled back 50% retracement, we knew to still be scouting the hourly high or low, but entirely possible we just trade within this tightening range because it's a very wide range. If the bulls do break this inside bar in their favor, we watch for a lower high, anything under 460. So still overall on the weaker side as long as we remain in a daily downtrend for NVDA. SMH, same deal. Inside bar with a lot of space for a daily lower high. So the bears were on the verge of taking over here today. As I mentioned, all major sectors hitting the lows at the same time. And I was also watching, I'm keeping an eye on Google. As I mentioned, Google has to roll over if the bears are going to get anywhere. Can't have one of our major names hitting 52-week highs. But I'm watching this rising wedge. And the key for me on Google is there's a base now of support at 136. You can see we held just recently 136.24. Let's go to the hourly. So here's that potential rising wedge. But if we don't break 136, the rising wedge has no chance. So that's step one. But look at these lows here. We've got 4 days in a row holding the low 136s. This is a line in the sand that the bulls are defending. Remember when NVDA had a line in the sand that the bulls were defending back? Where was that? I'm not going to be able to find it on the fly here, but I think it was up here. 480s. Certainly the 440s and the 450s was a big one. With all these holds. And once we rolled over, bears gained some momentum. So key, I don't trade Google much at all, but I'm watching Google 136 for implications on the NASDAQ and other big tech names. And other than that, also talked about the financial sector. And we failed resistance this morning, and we dropped down, and it looked like we were about to confirm a daily downtrend and shape up a weekly lower high, but we broke support by less than 2 pennies. I'm considering that a double bottom, and bulls trying to keep control. So again, if we're going to see weakness in the NASDAQ, Google needs to roll over, Apple needs to roll over. Apple had a green day. Testing key resistance on Apple in the low 180s potentially tomorrow. If we're going to see the S&P 500 roll over, we've got to see the financial sector see weekly lower high set. So those are a number of the puzzle pieces that are key if the bears are going to take over the S&P 500 and the NASDAQ. Tesla trying to set a daily higher low off EMA 12. Hourly trend change back to the bulls will be needed still. So that's up to the bulls tomorrow. And if we break the high of today tomorrow, 267.85, I'm going to move my stop loss up on my swing position to under 260. And may even just move it up there anyways. And again, ensuring that my entry from if I move my stop up to 260, unless there's a big gap down open on news, then that is a bare minimum of something like 18%. So just want to lock in gains, knowing that it's entirely possible that we see a Tesla weekly lower high and a Tesla tightening weekly range into late fall. But burden still on bears there. IWM confirmed the weekly head and shoulders. So now on the monthly consolidation underway, triple top rejections. And now we're watching for a higher low compared to 167 if we're going to remain within a tightening range. Entirely possible that shapes up for the rest of the year. But we know the bears have short-term control as we are in a daily, weekly, and hourly downtrend right now. So the bears are confident. And all that is without financial sector weakness. The financial sector is holding on strong, and today tested its highest level in over a month. Yet, IWM tested its lowest level in a month. And so again, it's still the industrial sector that is having an impact here, but we can say that the IWM bears are positioned very well if the financial sector were to weaken. ARKK, also still very weak. You can see growth is selling off. ARKK set that clear weekly lower high. And so the question here, same as SPY and QQQ, do we confirm the weekly downtrend or do we set a higher low and tighten up? And SPY and QQQ bears wish their chart looked like ARKK with just the straight stair-step drop 5 days in a row, complete bear control, and a lot of space for a daily lower high to be the result of the next bounce there. CCJ, so was watching for the potential of a daily bull flag, and today tells us, nope, that's not a daily bull flag. We did get to hourly oversold conditions in the afternoon, but I'm personally being picky with the FOMC coming, and I'm looking at URA, the ETF, and watching to see if it gets to hourly oversold. So we would need to see URA with another leg down for hourly oversold conditions. There's also a gap fill at 25.70. So just a couple things that are keeping me a bit patient and picky if I'm looking for a long entry on this consolidation in the uranium sector. Overall, even weekly consolidation would be healthy. I mean, URA can pull back to 25 for a weekly higher low and still be very strong. So patiently, we could see that temporary climax euphoria top forming and just patiently watching to see where do the scales tilt again. Demand was exceeding supply significantly. Now supply is exceeding demand. When do those scales tilt back again? And it's when we set a convincing higher low, wherever that is. Failed trade today on the morning live stream. Thanks for those of you that tuned in. So I was looking to play LAC for a daily higher low. We were testing EMA 12 support, or we were approaching EMA 12 support, and we were pretty beat up. The hourly RSI was oversold, the 15-minute was crushed, and the 5-minute was beat up. And so that's when I'm looking for a daily higher low, those are the conditions I want to see. Hourly, 15-minute, and 5-minute all oversold, which increases probability that at least a short-term bounce takes place. And my goal was to make an entry, sell half into a short-term bounce, and then put my stop break even, and that's either the daily high or low or I stop out. And so my attempt was down here, and the bulls made a little attempt. So entry 1952 or something like that. I put my stop at 1929. I was looking to sell half at 1975. We got up to 1960, but never got that bounce going, and so stopped out. And one takeaway for me is I've been watching this LAC chart for the last week or week and a half, just getting familiar with it. And, you know, it's a name I haven't traded. If I have, it hasn't been in a while. And so just watching, but there's a nuance where you can look at a chart, but there's still information that it doesn't tell you. And for me, you know, it looks like high volume, but I really dislike the liquidity on this name. I was just watching it trade, and, you know, on these 2-minute candles, a significant amount of volume was $250,000, which for me is not nearly liquid enough. I want to see, you know, I want to see 6 figures. I want to see $100,000 order have no impact on the price. And the more I watched LAC today, the more it was, you know, $100,000 impacts the 5-minute time frame. And so I like charts like Tesla and NVDA and TLRY and these names that have, you know, 100 million plus volume, where $100,000 doesn't, it's a drop in the bucket. It does not impact things. And so that was just a takeaway from me is, you know, I can watch this chart and get familiar with it, but that doesn't tell me what the liquidity is like, just watching the bid and the ask and the spread and the amount of volume. And so you know, that tells me, if anything, this will be a swing trade if I ever trade it again. It's not a day trader for me, because again, you know, to trade less than $300,000 in a 5-minute candle for a couple candles here, it's just not enough for me. Not enough liquidity for my day trading style. The dollar still holding the uptrend, EMA 12 support, and we are either going to see a bearish reaction to test daily support tomorrow on the FOMC, or a bullish reaction to a new high. And so we know the metals are swimming against the current. They've done a decent job, but we've got to see gold and silver confirm daily uptrends if we're going to believe that this weekly bounce can follow through. So both gold and silver, we need that daily trend change to confirm. Miners rejecting from resistance, $30, and we're topping out just under it. That was actually a nice top fish for bears first thing. Double top with the high of yesterday to the penny into a pretty big dump. Dust had a big bounce there. Meh, 3%. Not bad for an hour. Oil looking a little toppy just because it's the most bearish daily candle we've seen in a few weeks. And so we're watching for a 4-hour head and shoulders. Aggressive bears are going to look for a 4-hour lower high next bounce, and we must break 90.75 to confirm it. And we're seeing the energy sector leading the way down, as I was talking about the relative weakness here. It's a bearish engulfing candle. We rejected from the all-time high by 7 pennies, and we dropped down to the lowest level in over a week. Meanwhile, oil is only hitting the lowest level in 2 days. So again, the relative weakness just continues to glaringly stand out, and we're going to watch to see if XLE is shaping up for weekly consolidation. And there's a lot of space for an hourly lower high on this current bounce attempt. But obviously the premise is oil needs to top into daily consolidation if the energy sector bears are going to follow through here. In natural gas, sideways daily range breaking bull. We're off to a great start, but just need to ensure that we keep the uptrends now. Need to keep this 4-hour consolidation healthy, ideally holding EMA 12, and then see another leg up. We did break both resistance levels here and here. Next level is up at 302. But great start. We'll say that much. And bulls are pleased with today. Just got to ensure that you don't lose that 4-hour uptrend. The last thing a bull wants to see is this break go straight into daily consolidation. So just keep that consolidation healthy to try and follow through. And that's that. We'll see what the FOMC gives us tomorrow. And watching for daily lower highs in a number of places. Meta's been battling 300. Meta struggled to close above 300 on the way up. A bunch of battle. And now we're battling to hold it. Bears are struggling to close below it. Still watching that potential head and shoulders, but the bulls did play some defense today. And so again, the case for everything is, all right, we've pulled back enough to potentially lose the daily uptrend, but can the bears confirm the daily downtrend? That's the question on a lot of individual names. We'll see what we get for the FOMC reaction tomorrow. Do good things. Have a good rest of your day.